Good morning. It's Monday, October 14th, about 6 a.m. Central Time. Overnight, the precious metals are slightly weaker after a two-day Thursday-Friday bounce off key levels of support following an uptick in initial claims. They reached their highest level since June of 2023 and a slight uptick in inflation readings. So to give you a quick recap here, the uptick in initial claims was somewhat elevated from the two hurricanes that came through. However, there appears to be concrete evidence that the labor market is deteriorating. Overnight managers at Boeing announced plans to slash 17,000 positions. Those cuts amount to about 10% of Boeing's global headcount. Also, the ECB cited officials are fearing a sudden deterioration in their labor market, calling for faster interest rate cuts out of the ECB. So we're seeing this global deterioration in the labor market, and it should accelerate central bank cuts. Now, remember, in September, we saw about 21 interest rate cuts out of global central banks. The highest level we've seen was during COVID, where it was 46, but we want to continue to see an accelerated path well into the teens for interest rate cuts to start to provide that boost to the gold market against all different currencies out there. So when you start measuring it against different foreign currencies, you'll see that it's reached many all-time highs. Now, looking at the overnight price action, you do have December gold about a $20 range, $25 range overnight. December gold, $26.73, down about $3. Low on the session, $26.60. High on the session, $26.84. So we're right about in the middle of the session right now. Looking at the December silver contract, down 34 cents. So it had a pretty wild trading range here, about 80 cents overnight. Low dipping just below $31 at $30.94. High $31.75, and we're sitting at about $31.41. So a bit of a recovery off those lowest levels. Copper futures saw about a 7-cent range, but they are at the lower end of the price band, down $7.45, sitting at $4.41 last. So if we continue to see a deterioration in the copper market overnight, especially trading below that 440 level, you should see silver prices track lower with it. So be aware of that. Now look at platinum on the January contract, down $9 at $9.84, hit a high of $9.96. So really platinum, the edges, and you go back over the last couple of years, 1100 on the upside seems to be a bit too overstretched. Below 900, really 850 on the downside, a bit overstretched right there. So that's where I would take counter trend positioning, and there are great options available on the platinum market. Looking at some other standouts here, Bitcoin, for whatever reason, up about 2 G's here. That's a 3% move, sitting at about 65,000. So the price momentum changed on that a bit. The equity futures really took off to the upside on Friday, and perhaps Bitcoin playing a bit of catch up right there. Now, the big mover and shaker in the overnight session, down about 2.5%, is going to be crude oil. So it's down $1.87. And they say that oil declined after China's highly anticipated finance minister briefing on Saturday lacked new incentives to boost the consumption. They are one of the largest importers of crude oil and the second largest consumer. So there was a lot of details as far as how this was playing out, how they want to boost the property sector, and that directly ties into the commodity consumption of concrete and steel, and then that is closely correlated towards your copper, your aluminum, and then of course silver is way down on the list, but you see this kind of snowball precipitation when prices start to sell off. Now this week here, we will have some event risk, and that's really going to be closer to the end of the week. So today it is a bank holiday. We are going to see a lot lighter volume. The problem is when you get a big announcement out of China on a lighter volume session on Monday, and a lot of times we'll see this around like Martin Luther King or Columbus Day, things like that, where we get that kind of a day off on the weekend. You do see lighter volume, which means stops get hit, stops get ran, and then prices tend to sell off here. So it's not really, in my opinion, as a trader, generally I don't try and become a hero on these types of lighter volume session because they often continue to shake out when you go into the Tuesday session as well. Now, looking at some things coming out, we will have a ton of Fed speakers. We do have about 3 today. Tomorrow on Tuesday, we'll have the Empire Manufacturing Index. Wednesday, import import prices month over month, but it's Thursdays where we get the retail sales figures, we get the unemployment claims, we get Philly Fed, we get capacity utilization, industrial production, you'll have your crude oil inventories, you got a few more Fed speakers coming out, and then Friday we'll have housing starts and building permits. So I really think though Thursday could really seal the deal for that 25 basis point cut at the November 7th meeting. You look at the Fed's probability, the CME's Fed Watch tool, you got an 88% chance that the Fed cuts 25 basis points. Leaving them rates unchanged is about 11.8%. So it really is starting to move in that particular direction. Now, gold futures chart pattern wise, critical level support coming up just a touch, about 26.25. I think you don't want to see prices break below there. Chances are they'll retest 2600 and the rising 50-day moving average at 2577. So if futures can come back, take out, go positive on the session, start to threaten that 2684 and actually make new highs on the session, I think we got a good shot here running for 2700. I did check out a lot of the different charts on the Bloomberg terminal. Nothing really stood out too much. Copper inventories poked up just a little bit, but it seems like people are starting to flow into the gold ETFs. Remember, there's a delayed reaction after the first interest rate cuts. That's where you're going to get the RIA doing a lot of rotation like what we saw on Friday. We're starting to see where they're coming out of the tech-heavy sector and they're going into things like the small caps, the industrials, the banking sector here. So you're seeing the Russell 2000 that's picking up quite a bit. Copper futures kind of flat. Your critical level support, I really believe, is going to be 434. We break below that, chances are we're going to test where the 50 and the 200-day moving average come in at 426. Now, silver is an interesting chart. Something I don't want to see is I don't want to see it close lower and then sell off again tomorrow. We're just going to continue to go into this wedge pattern here. We really need to take out those Friday highs, which looks like it's right around 31.84 and a half. So that's just about 10 cents below today's high, the opening session. We want to see that market close above that level in order to threaten 32, 32.15, 32.50, 33.22 was the recent high, and I believe we can hit that $35 range. Now, our $35 price projection isn't towards the end of the year, and then on the gold market, I think realistically something closer to 28.50 makes logical sense if we continue to get the deterioration in the labor market and the interest rate cuts to follow. So platinum futures appear to be kind of consolidated in the middle of the range. I think if it breaks through that 1,000 level, we'll shoot up to 1,017 pretty quickly here. So that's kind of my rundown and recap. I'll give you guys a lot more specifics on gold and silver, some of the things we're watching here tomorrow on the Metals Minute. So any questions, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.